What is up, guys? Welcome. Crypto FUD. And let's jump into this, guys. We got a hell of a show today. Obviously, markets are opening up in literally like 30 seconds. Today is it, guys. Today is it. We got J-Hole today. Jackson's Hole, I think it is. No Diddy on all that. But if you guys have been living under a rock, Jerome Powell is going to be talking today in regards to the economy and just a lot of stuff going on. A lot of people are going to be watching. The markets are going to be reacting, and we're going to be here live to show it all. So make sure you guys get your popcorn, get something to drink, get a little snack, get comfy in a spot, and we're going to basically be here for a little while. He's going to start talking in about 30 minutes from now, and he is usually on time, maybe a few minutes late, so we should be starting around 10 o'clock Eastern Standard Time, which, fun fact, Jackson's Hole is actually in Wyoming, so it's mountain time over there. It's going to be 8 a.m. where he's going to be at, so. All right, guys, well, while we're doing that, let's kill some time. Let's talk about the market. Right now, Bitcoin, we're seeing around that 112,100. We are struggling. We are trying to hold at least that 112,000 mark. We did break below it briefly. We did drop down to about 111.7. You can see, but the 112 area seems to be a spot where we're trying to hold that support. Now, I did tell you guys this yesterday on the stream. I said just be prepared for volatility. Obviously, we've seen volatility all week, but as the markets, as of last night, as of this morning, right? You know, we're going to see people shifting and trying to get in their positions. No Diddy on that one before Jerome starts talking, right? And why is this such a big deal? Well, obviously, we are anticipating that we're going to see some kind of reductions in interest rates coming up here in the next, meeting, maybe the next few meetings, right? But given last week's PPI macro, it came out, it was not good, right? Not good numbers. So a lot of people are anticipating that Jerome Powell might have that ammo to really be able to be able to continue to kick the can down the road, but actually have some backing behind it. Basically pointing at, the PPI report that came out, which was not good, like I keep saying. Everything else seems to be pointing in the right direction for some rate cuts, but other than that, like I said, you give this guy anything and he is going to, he's definitely going to probably act on it. Looking at the basically what the market's anticipating, and I've been telling you guys this for over a week now. I've been telling you guys this basically since we got that terrible PPI report, that this was going to be fluctuating, and it was going to be fluctuating in a way that we don't want to see it, right? Now remember, we started off just literally 5 days ago, 99.9%. It was basically 100% written that we were going to see a reduction in interest rates. And you guys can see now we have literally dropped down 30% since 5 days ago. And now it is at 69% of the market is anticipating that we're probably going to see some kind of a reduction in interest rates. And we have a little over 30%, 30.4% basically indicating that they're thinking we're going to see a pause again. It's just not time yet for the Feds to reduce rates. So I'm going to give you guys, before Jerome Powell even starts talking, I'm going to give you guys my opinion on what I think is going to happen today. I honestly think that he is not going to give us anything that we want to see positive for interest rates for today. I think he's going to come out and he's going to say the exact same things that he always says, right? I think that he's going to come out and he's going to be not necessarily like overly hawkish, but how he does it, right? He does it very elegantly, where he just basically, he just says, we're still waiting for the data. We're still waiting for the data, and then he's going to bring up the PPI report, the labor market, stuff like that. And pretty much, I think when we hear that, I didn't mean to say that 5 times, but when we hear that, the markets hear that, they're going to probably start selling off, right? I don't have the chart here, but I posted it in the Discord. I wish I should have freaking saved it on here. Of every time in the last 3 years we've had Jackson Hole, the markets, they drop. The markets drop. It's a known thing, right? It's a known thing. But every time in the last 3 years, the markets basically after about a week, they brush it off, and we start rallying right back up to where we were at, if not continuing to make highs. So what I'm getting from this, and what I think, my opinion, before we get into all this stuff, is just don't get overly scared. Don't make rational decisions. Let everything play out. This is literally a scheduled meeting that we see every year, annually, right? The markets react every time the same way. They sell off, and then they come right back and buy back in. Now, if we get something crazy where this guy just comes out, because remember, this is his last Jackson Hole meeting, right? Because he's going to be, regardless of whatever happens to Powell, he is done, I believe, in May of 2026, if I'm not mistaken. So this is his last big event, right? Other than the FOMC meetings. So is he going to come out, stern? Is he going to come out maybe and try to help these markets out? Because his legacy is on the line here. And honestly, in my opinion, we're gonna move on from this. I don't have a problem with Powell. I think Ricky said it before, right, in the Discord. We've all kind of agreed. Regardless, the guy has a tough job, right? He's balancing the economy where, we don't go into, massive inflation, right? Or he's trying to battle massive inflation that we had at 9%, but he's also not trying to crash the stock markets and, the economy on the same time. And it's not just the U.S. economy. It's the world. It's the world, guys. So it's a big thing. Johnny, what's going on, brother? Overcome. The economy is strong every time. Well, oh yeah, we need to we're going to open up some polls. Thank you for bringing that up, Overcome. We're going to put up some polls. What do you guys think Jerome Powell is going to say here? His key words, right? Bill, what's going on? Johnny said he bought some this morning. I'm ready to stack up more and ride the wave. I hear you, bro. And that's pretty much how it was for me this morning, yesterday. On big dips, I'm just buying. It's pretty much what I'm doing. I'm just kind of waiting, because yesterday, if you guys notice, we were getting, and I told you guys this, we're going to get these little spurts where the market wants to rally, right? The markets want to rally, but then they're like, wait a minute. Oh, shit, hold on. Tomorrow, Jerome Powell speaking. Let me sell off. And it's what it feels like how the markets are reacting, right? We're seeing somewhat of some moves, and then we sell. Somewhat of some moves, and then we sell, right? But if you can see, obviously, it has been on a downward trend as we're making lower lows and lower highs as basically this week has unfolded, right? But remember, just a few days ago, literally not even a week ago, we were at 124,000, we'll call it 124,500, making all-time highs. So, I mean, I'm old enough to remember when we hit all-time highs. Let's see here. We're down about 11% from those all-time highs. That's crazy. This might be that September drop, guys. Who knows? Maybe we're getting it a little early here. Let's see here. So crypto bubbles, obviously, you guys can see across the board, nothing but red. We have fear in the markets. Crow's up about 2.5%. We have Lido up about 4%, and we have Morpho up about 5%. But other than that, pretty much red across the board. Nothing big as far as crashes or anything like that, but nice 5-6% drops continuing, for today, obviously with the markets being a little scared as they are. Let's see here. Those are liquidations. No, thank you. Bitcoin traders, we're just killing a little bit of time. Jerome Powell is going to be talking in about 20 minutes, guys, and we're going to have this all on here. Bitcoin traders position for Jackson Hole. What Powell's big speech could mean for crypto. So, Bitcoin traders have been in profit-taking mode ahead of the Federal Reserve Chair Jerome Powell's highly anticipated speech on Friday, betting on an upset. That's evident in the price of the world's largest cryptocurrency, which has fallen about 10% from its all-time high, price of about 124,300 on August of 14 as of Thursday afternoon. While consensus expectations continue to anticipate a rate cut in September, digital asset traders appear to be positioned for Powell to adopt a hawkish tone tomorrow and not signal that a cut is likely. And this right here, that right there sums up what's going on for this week. That literally sums up what is going on for this week, right? We have, and it shows on the data, right? It shows this has been basically slowly but surely moving over towards, a lot of people are starting to really think that we're going to see that big pause, and we're probably not going to see some kind of a reduction in interest rates. That's why I say a few minutes ago, I'm anticipating that it's not going to be a good meeting for the markets, right? It's not going to be a good meeting for the markets because think about it. Do you really think Jerome Powell is going to come out today and really just give us what he never gives, right? That positive, that the Feds are really thinking of, or the Feds are already set. We're going to see some reductions in interest rates coming up, possibly in September. Do you think he's going to say any of this stuff? I really don't think he's going to say any of this stuff, to be honest. I'm not trying to be dramatic or anything like that. I'm just anticipating that he's going to talk about the economy. This is literally like a glorified FOMC meeting, just with no anticipation of any kind of a reduction in interest rates for today, obviously, right? No one actually thinks in their right mind that we're going to see a reduction rate in interest rates today. And you know what? I heard a few people throwing that out there, and I was kind of like, are you kidding me? But you know what? Imagine if he did. Imagine if he came out today and he's like, and that's why we at the Feds have decided that we're going to actually reduce the rates today a whole 100 basis points. The markets, I think it would be the biggest green candle that you could ever see on Bitcoin in the markets, but it's not going to happen. It's not going to happen. But the Coinbase Binance spread, or the price discrepancy in spot Bitcoin between the U.S. largest publicly traded exchange and the world's largest exchange, moved into discount territory, which indicated a strong U.S. spot selling, according to Sean. Let's see here. It does not seem adequately that the consensus is that Jay Powell will be net hawkish. Okay. Let's see here. Meanwhile, the barometer for the U.S. monetary policy is signaling that in September cut isn't in the bag. Future contract traders now place 73%. That was as of earlier, right? We've even dropped more than just that. Probability for us to reduce interest rates. So, like I said, we already looked at that. We're at 69% as of now. So, it's literally dropping. Let's load it up again and see if it's dropped in anymore. Oh, look, it actually increased. It increased. What are we getting here? I wonder if there's any news. Bitcoin trying to bounce. I have another screen here, guys, and as soon as we even get like a stage set up for Jerome Powell, he's going to be out. We'll have him on the screen, so don't worry. Ricky's in the house. What's going on, bro? TJ. Ricky said, the economy in my portfolio is very weak. Oh, you'll be all right. You'll be all right. Something tells me, Ricky, you're just playing around. Ricky's got a couple commas in his portfolio. Don't let him fool you. Let's see here. Liquidations in the last hour. Looks like about $8 million in liquidations. It looks like the majority of them being in shorts. Look at that. What is Ethereum doing right now? It looks like people, and that's literally probably in the last 30 minutes. Look at this. Let me move this little channel that we have here. It's a little bullish setup right there for Ethereum. If you see, we've been in this channel. You see we got rejected at the top of the channel as we continue to keep moving down. And look, we actually are trying to bounce at the top of this channel right here, which is somewhere around 2444. We're at 4,306. And that's why you had some people right here. They think it's just... And that's why I was telling the other day, I was like, you know what? Not financial advice, but if you're leverage trading before this freaking Jackson Hole, you're nuts. You're nuts because you're basically gambling, right? You're legit gambling because no one really knows what's going to happen. The markets, your money's going to be in the hands of Jerome Powell and his wordage. And I just think that's craziness. That's like your risk as far as like losing is so high, in my opinion, whether you're long or shorting. And this right here shows you can see over $7 million literally just in the last 30 minutes has been liquidated on Ethereum, right? What do you think those people are going to be doing? They're going to be revenge trading now. They're going to be like, they're basically going to keep, oh my God, it's jumped up even higher. Look at that. As we keep loading up. These people are gonna keep trying to move their position, right? They get liquidated. They're like, all right, now I'm gonna open up a short at 4,300, right? And they're gonna keep doing it. Not saying this market's about to blow, but you're gonna get fluctuations until this guy comes out and talks, which is gonna be in 15 minutes. He's gonna be out here, guys. 15 minutes. Make sure you guys slap that like here. Let's start a poll. All right, so I'm starting a poll. So let me know what you guys think. Is Jerome Powell going to be bullish or bearish? And really what I mean is he going to be hawkish, right? Remember, hawkish is bearish, and dovish would be bullish, right? And I mean like that as in like his tonage. Is he going to come out? Is he going to be, maybe indicating, because he's not going to tell us straight up, yeah, we're reducing interest rates on September. Even if they already have it written in the bag, he's not going to say that, right? But if you can listen to his words, and he might signal, some kind of wordage to where it's not as, bearish and possibly more bullish. If that makes any sense. Holy crap! Oh, that's a scam. I'm like, what the hell? I thought that was my watch list. I thought I saw something up 1,000%. I was like, what the? Look at this. Arm Trust. Where's who was? It's EOS, I think, that was in Arm Trust. They're having a solid freaking day, up 57% right now. Now this project right here, this is a DeFi project that's on Chronos. The reason why this project is doing good, if you guys can see, this project is tied to gold, right? And I can almost bet my money that if we pull up the gold chart right now, gold's having gold's not, up or anything like that, but it is down about a 0.1%. But I think gold has been doing decent in the last week because people have been scared. And whenever you see the whole market scared, usually they tend to do what? They'll usually go into the dollar, DXY, and or go into gold or silver whenever the markets start to get kind of spooked out. So, looks like Bitcoin doing what Bitcoin's been doing, right? You feel like, oh, all right, nice, 12. We're at 112.5, 112.6. It literally came up and did the same thing. Got rejected right here at that 112.666. Whoa, scary right there. So, I mean, we're probably going to sit in this channel. We might start moving up as Jerome Powell starts talking. But get ready because we're going to move over to the 5-minute. He'll be out in about 10 minutes from now. Let's see here. We're on the 5-minute now, so the chart's going to get real dramatic. I'm just checking the other screens just to wait and see here. Nothing yet. Jackson Hole. Let's see here. Ricky said we swept the lows, did everything we were supposed to do. Very good possibility we will be on the uptrend for now, regardless of today's crazy volatility. I think as the days go on, I agree with that. I just think that today could easily be, it could go either way, right? Obviously, we could easily, you think we've swept lows, and we could easily, there's no low that we haven't swept, that we could easily come back. I think it would be swift and quick, if we dropped any lower, potentially. But it's like I said, it's going to be basically just all off of what this guy's saying, Eduardo, what's going on, bro? He said, have you put your eyes on Kick Crip? I bought some based on the top holders and speculations about Bonk and Kick Stream possibly partnership. Old, what's going on, brother? I saw you you put it in the Discord. I looked at it, but I never really bought in. I saw you. Who was it? You said KuCoin was buying or somebody, right? The one thing I will say about those wallets, dude, is I'm noticing that a lot of these projects will have like if you see like a big buy will come in and you go and trace the wallet and it says like, oh, this is funded by Coinbase wallet too. And you're like, holy shit. And then the project never does anything, right? I'm thinking that, I'm pretty sure because you could do it on Phantom, that you can freaking label your wallets. And I think people are doing that shit purposely to make it seem like Coinbase and some of these big exchanges are buying in. I could be completely wrong, but it looks like that is what's happening, because I've seen it plenty. I've seen it so much more in the last like month or two, where all these big wallets, it looks like like Binance. Binance is buying this project that has like market caps at like $100,000, and you're like, Binance is buying this, like it just doesn't seem legit, But I'm not saying that's the case on this. Who knows? So I mean, this, you can see it's down 33%. I know you guys just dropped about 3 days ago. Market cap's at about $250,000. Liquidity's at about 70,000. Volumes at 700,000. 1,250 wallets as far as trading. So I mean, it looks legit. It looks legit as far as the numbers. I would just be cautious. You see these nice little swings. Maybe you can take advantage of that. I know you're probably long term on the project. I would just keep an eye on volume and how many people are actually trading the project. If it starts to dwindle down, you're in that new token stage where it's only been out for 3 days. Give it like a week or two and keep an eye on it and see if the volume is holding up. So, but I mean, obviously it has good potential with such a small market cap. And if this was linked to actually Kick, which I don't believe it would be, because they'd probably have a lot more money and liquidity and stuff. I mean, if it is, that could be a play right there, because Kick is coming up. So who knows? And Aiden Ross owns like a portion of Kick. Him and wasn't it like FaZe Rug? They came out with a token not too long ago, literally like a few weeks ago. It did terrible. There was a lot of backlash obviously from it, but I'm wondering that could coincide with maybe Kick is trying to make their own token or something like that. Who knows, right? Bro, did you guys see freaking Kanye West dropped a freaking token like 4 days ago? What was it called? It's like Yeezy, right? I think it's YZY. Yeah, this shit's dropping. But my God, if anybody was able to get in down here, you freaking made off like a bandit. It was sitting around 20 cents, and this thing shot up to $3.17, going up to a $3 billion market cap very briefly. Absolutely ripping on here. There was a lot of money being made on here, but obviously you can see it is slowly but surely dwindling down. So, I mean, but it looks legit. I mean, market cap's at $87.2 million, and the liquidity is at $89 million. So, I mean, I bet you $1 million, because Kanye's got so much flipping money. He literally dropped a token. He ain't taking probably no money out of that, Eduardo said Eddie is the developer. Well, not confirmed, but it has his name on the developer address. Eddie is the co-founder of Kick. Oh, I mean, you'll have to see, right? You'll have to see how it plays out. I mean, for right now, it's just, how it is with DeFi, bro. Anybody can make a token. Anybody can, name their wallet a certain name, So, I mean, if it starts to end up being like where it's all true, that project will shoot up like crazy, But I guess only time will tell. Guys, we have about 6 minutes until Jerome Powell is going to be coming out. I'm just waiting for the news feed to pop up for Jerome Powell, and we'll have it up there. As soon as the stage is on there, we will have it. What is, let me see here. So on the poll, looks like we're 50-50. All right, never mind. What are we doing here? Someone keeps going back and forth. We're 50-50 right now, bullish to bearish. Is Jerome Powell going to be bullish, or is he going to be bearish? I personally, I wasn't able to vote. I would move it over to me personally. I think he's going to come out and it's going to be bearish. I really do. I think it's going to be a bearish meeting, in my opinion. Ricky said they said 5 wallets cashed in on most of Yeezy's pump. Who knows, bro? Who knows? You know what, Ricky, though? I know it easily could be people that he's working with. It could be him. Or it could have been just snipers, right? I mean, that does happen, bro. People drop tokens. They have so much botware now that right when shit drops, I mean, anytime anything drops in Solana, these bots, they buy in. Like it's all botware where they're able, as soon as anything, the split second it drops, like money goes into the project, so they could easily snipe in, multiple wallets and be able to, cash out. So right now, Bitcoin's sitting at around 112,500, guys. It looks like that spot is going to be our resistance for now, 112,660. That is going to be our resistance. Ethereum cooling down a little bit. We're at around 4,289 as of now. The hourly, looking on the bubbles hourly, you can see looking like the market's trying to bounce, right? Trying to bounce, but this could easily move over into the to the red. So we have about 4 minutes, guys. 4 minutes. Ash Crypto, Fed Powell speech starts in less than 5 minutes. Expect volatility. Lark, are you ready? Looking to see if there's anything going on. President Trump to make a major announcement today at noon. Great. Here we go. Wendy O, look at this. Our financial future is in the hands of this man. He's like, wait a minute, this project costs how much? He's like, wait, we're spending this much on this building? I didn't even know that. Well, these numbers are uncertain. And with the tariffs and uncertainty. Yeah. So what we're going to do is we're going to have Jerome Powell. He's going to be on the screen, and we're also going to have the charts. I have it on the 5 minutes just to see if we can get, so we can see, obviously the chart, the market moving. And I'm going to try not to talk over Jerome Powell as he's talking, so I'm going to try. All right, looks like it's setting up here. We got about 2 minutes. Let me put this on the screen here. What is it? Let me fix something here. Got about 2 minutes, guys. What is it that we're not seeing here? The bottom. All right. Get ready. Ricky said Lark posted a picture of JP at the airport and said, "This doesn't look like a face of a bullish man." I'm telling you, I personally, I do not think it's going to be, we're not going to see any, I don't think he's going to be bullish today, but who knows? Reed, what's going on, bro? It's my boy right there, Reed. I think he's going to signal one cut, then see what the data says from here or from there. So, I mean, supposedly, he has signaled that we're going to see 2 to 3 cuts this year. This was breaking news like a few weeks ago, which I was like, how the hell is that possible? If you look at the meetings that we have coming up, we only have September, we have October, and we have December. That's it. So if we were going to see 2 to 3 rate cuts, it would have to be most likely September, October, and December, right? So, I mean, I don't know. I would probably bet that we're going to see some kind of a rate cut by the end of this year, but we could potentially only see like maybe one, right? We could potentially only see maybe one. So look at the market. The market's running right now, guys. Look at this. Maybe December. Yeah, that's what I'm thinking. Let me check something. Is this guy talking? Are we missing something here? Holy shit. We're running right now, guys. Bro, whoever was shorting the market right now is getting their ass handed to. Let's just look this up real quick. Look at that. Not almost $10 million in the last hour. Where are we at, Jerome? Hold on here. Let me see if there's if we're missing something. Nothing yet. He's not on stage. Now I got to get that feedback. He's not on yet. Whoa, what happened to the screen? Oops. Sorry about that, guys. Holy shit, look at that. Look at that run right there. Holy crap. Guys, listen, I'm going to go get some water. We have everything lined up right here. I have the screen up. Just give me like 30 seconds. I'm going to be right back, all right? Audio's on. Make sure, yep, audio's on. Everything's good. Just give me 30 seconds here. Hold on.
Labor market remains near maximum employment, and inflation, though still somewhat elevated, has come down a great deal from its post-pandemic highs. At the same time, the balance of risks appears to be shifting. In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework, as captured in the revised Statement on Longer Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions.
Hold on, guys.
Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance.
got it right here.
Okay, if there's one AI site builder.
Sorry about that, guys.
What their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes.
Relax, Bill.
The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods.
Here it comes, guys.
Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks.
115.
Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above
Super fly, super good, shoulda, coulda, knew I would. Super fly, super fresh. That's your mom.
our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at Reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy.
Give him some water.
To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era.
Look at Ethereum, guys.
It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the make-up strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher,
liquidations have happened
and limit the risk
in
of
the last
deflation
hour.
when the economy weakens.
117 million now.
Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate.
That's why
it also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy.
Guys,
For
look
this
at this
reason,
real quick.
our
I don't mean to
policy
talk
actions
over. Look at
depend
this.
on the economic
91% of the market's
and the
calling for a
balance of
cut
risks
now.
to that outlook.
Look at this, guys.
We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor, helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
I think that's pretty much all we're going to watch. We're going to have a quick update, guys, but the markets are rallying right now. A couple big things to talk about here. I don't think we need to listen to this lady, right?
Thank you very much.
We don't.
We'll move into the presentations. So
That's pretty much all we need to. That's all we need to see, right, guys? All right, so couple things here, guys. Couple things here. Make sure you guys slap that like. If you guys are just joining, hit that like. Jerome Powell, basically, he's indicating that even though we did see some kind of messed up macro numbers as of last week, for the most part, we're still on track for some kind of a reduction in interest rates. And as you can see, before he started talking, remember, we were at, 69%? Look at this. Let me update this real quick, but look how much we have moved. 91.3% now of the market is back to calling for some kind of a reduction in interest rates coming up in just 26 days from now at the FOMC meeting in September, guys. So that is why you're seeing the markets, picking back up. We did run up. We're at 115.1 right now. We did run up and hit our head at 115,747. Isn't that crazy? I have all these spots on here, right, as support and resistance line, and look at this, beautifully hitting these marks like we have on these charts. So you guys can see that we did, basically, we ran up, like I said, we ran up to 115,700. Ethereum ran up to, what was that? Oh my God, Ethereum ran up to 4650, almost coming up to hit a big spot for resistance at around 4664. The point of the story is the markets are very happy. Look at all the green. This is in the last hour, guys. In the last hour, look at all this green across the board, right? So what we're seeing is that this past week we had a lot of outflows, right? A lot of the market was scared. We didn't know exactly what was going to happen with Jerome Powell. Well, we just heard what he said. Basically, he came out a lot more dovish than anybody would anticipate for Powell, right? Shout out to Powell. He came out. This was his last big major speech. Obviously, he has the FOMC meetings coming up as well, but this was his last big speech. And he came out and he basically stated, in a nutshell, that, everything looks to be to where it looks like we're going to be able to start reducing rates. I don't know. He didn't really give out, indications on how rapidly it would happen or how aggressive they would be. But even if we start seeing just small 25 basis points, in these next few months each, I think this is going to be a big mover for the market. And this kind of puts us aligned with us running and I'm not going to say necessarily topping out, but getting to some nice highs, especially for alts in these next few weeks, these next few months. September could be a massive month for us, guys, right? It could honestly be a massive month. I want to just look here so you guys can see September normally isn't the best month. If you go back to 2021, we were in the red. We always talk about that. I think this time around, we saw our dip towards the end of August, and I think September is going to be probably a good month for us. Look at the liquidations in the last hour for Ethereum. Absolutely brutal. Basically $120 million, $118.5 million in shorts were absolutely wrecked. And this is why you're seeing, and for Bitcoin, $33.5 million in shorts were absolutely wrecked in the last hour. And that's why you're seeing, on top of the markets, money coming back into the markets, you're also seeing a lot of these shorts getting wrecked, having to cover their positions as well. Just obviously all pointing out to be a good move for the markets right now. Excuse me. The S&P, NASDAQ, Dow Jones, all jumped up as well. The VIX is down 10%. The dollar's down right now. And you can see the S&P is up 1.2%. NASDAQ's up 1.4%. Dow Jones up 1.5%. Absolutely ripping right now, guys. The market is happy. Ethereum's up 8%. And you can see across the board, nothing but green. It's basically like a dam of water that was being held back, waiting for Jerome Powell to talk. And now that he's talked and he said some things that the market's like, the water's starting to come right back into the market. And we're starting to see all that money that basically has exited the market in the last week has basically, not all of it, but a lot of it has started to FOMO back in. So it looks good. Looks great right now. Yep, Panda, thank you so much. What's going on, Overcome? Panda, thank you for reminding me. He said Trump has got to speak at 12 p.m. He claims he has major news. Yep, we did talk about this before Jerome Powell came out. So in about an hour and a half, Trump is going to talk. Who knows what he's going to say, right? I would honestly imagine it's either going to be something with Russia and Ukraine, or potentially something with the tariff deal, potentially, maybe with China or something like that. Those would probably be the two things that I would imagine he's going to be coming out to say. So who knows, man? Hopefully we can pile on some good news, some more good news on top of this right here. And who knows? I honestly think if we look at both charts of Bitcoin and we look at Ethereum, bro, Ethereum is literally like not that far from its highs. Obviously, it was a lot closer a few days ago, but what I'm saying is you can see how fast Ethereum's moving. I would not be surprised if we get something crazy, some crazy news, I wouldn't be surprised if Ethereum at least gets closer, if not retests. Finally, it's been 4 years to retest this all-time high at around 40, we'll say 4,900 potentially for Ethereum. Bitcoin, on the other hand, would probably run as well. I don't know if Bitcoin's going to run up another $10,000, but who flipping knows, right? The more the merrier right now, the more the merrier. So Old said also the FBI raid. Yeah, he's talking about for John Bolton, I think his name was. I don't know if he's going to talk about that. And if he does, I'm going to be pretty upset. I'm like, bro, keep that for the freaking news. Like, no one really, we don't need any announcements on that, But, yeah, we'll see how that goes. I appreciate you guys. Make sure you guys slap that like. We're not done yet, but make sure you guys slap that like as of now. Let me refresh this real quick. What a great meeting, honestly. Really is. Let's see here. I know some people are changing their stuff back over to bullish. I saw majority was saying bearish. Now the poll, 69% are saying bullish after the fact. Who cares? Nice. Awesome. I'm going to go ahead and end the poll. Thank you guys for voting. I really do appreciate that. I do appreciate you guys with that. Let's see how DeFi is doing right now. DeFi starting to wake up, all in the green, almost literally all in the green here. Looking fantastic right now. So I think as today goes on and we continue to move, I think the markets are going to react positively as word kind of just, circulates. Not a lot of people are not, I'm not going to say not a lot of people, but not everybody's watching live like we did. So OKB's up. Let's see here. I'm looking at some of the top movers for the top 100. OKB's still absolutely ripping up 130%. Morpho's up 31%. Zcash 20%. Chainlink is doing great in the last hour. It's up almost 8%. Sonic, Monero, Arbitrum up about 9% in the last hour. Absolutely crazy. Alts are reacting positively. And it looks like the market cap too. Look at this. Look at that nice jump in the market cap. We only need 300 billion. I know I say only, right? But for the crypto space, it's not too much. We only need 300 billion for us to come back and retest all-time highs for the market cap at around 4.2 million. So right now, guys, I will tell you this. I'll say it. We had a great meeting today. We had a fantastic meeting. This is pretty much what not a lot of people were expecting, right, as far as this, but fantastic news. So the markets are liking it. Jerome Powell possibly hitting at some kind of multiple reductions in interest rates coming up in these next few months. I think this will be, detrimental to us really seeing this massive rally that we've been anticipating, coming up basically in the last 3 months. October, November, December. Who knows, September might really kick it off and really jumpstart us to getting into those massive runs in regards to just Bitcoin and really, I think alts. I really think, guys, that Bitcoin's going to do great. I think what we're really going to be seeing is Ethereum continue to run the show, and your favorite alts, your portfolio, I think is going to see the best movement it has seen in a very long time, if not ever, in these next few weeks, if not in the next few months, guys. As long as we can kind of keep this bullish momentum, obviously we just needed these interest rates to start moving down. Hopefully we don't get anything like a curveball thrown in our way as far as like something with tariffs or anything like that. And I think we are on our way to a massive run. And this is why for the last week that we've been down, what have I been saying? I don't give out financial advice, right? Obviously. But after I say that, because I have to say that, right? I'm telling you guys, I'm buying. I've been buying, right? The last few weeks the last few days, for this past week, been just accumulating, right? Because regardless of whatever happens today, we know what's ahead of us. We all know what's ahead of us. What have we been talking about for the last 3 streams, right? All the whales are buying. All the whales are absolutely going crazy. They're all buying, right? Follow the big money. Follow the big money. Let's see what Twitter's got going on here. So you can see here, Justin, Jerome Powell suggests current conditions might warrant interest rate cuts. Everybody, look at this. Lark, he must be watching live. He's watching. He's a fan of the channel, as I am of him. He's posting. He said September rate odds just spiked to 91.5%. Look at this. Rate cuts are coming. Our altcoins will tend to 100x. Look at that. Justin, Jerome Powell suggests current conditions may warrant interest rate cuts. Look at this. The summary basically, Powell warns of mounting job risk, which is a plus for them to reduce interest rates, right? Not a plus for anybody that's going through it. Signaling a possible September rate cut. Powell notes rising threat to the labor market. Powell expects tariff-driven inflation pressures to be temporary. And Powell says shifting balance of risk could justify policy shift. Thank you for that summary. Appreciate that. And basically, those 4 lines right there are what everybody's taking, right? And they're running with it, indicating that it looks like September is going to... it looks like it's... I wouldn't be surprised if now we start shifting back up to that 99%, of us seeing some kind of a reduction in interest rates. So, let's see here. Looking to see if there's anything else that we have missed. Lark 6 minutes ago. We are so back. Thanks, J Powell. Shout out to Lark. If you guys ever watch, he has some great stuff on his channel for sure. Just looking to see if there's anything. We've covered pretty much everything as far as what I see on Twitter. So looks good, guys. What a great meeting. Great Friday, guys. That's pretty much it. I'm going to let you guys go. Ethereum just broke 4,600 again. So hopefully we're going to see some good movement coming in. If you guys are watching after the fact, or if you're here right now, because we have 20 people here and only 10 likes, hit the like button, please. If you're new, hit the subscribe button. We're here pretty much every single day, basically covering everything from DeFi to freaking J-Hold, you name it. You name it, guys. We're here. We got a great community building and building. So with that being said, guys, have a fantastic Friday. If anything crazy happens in the market today, like let's just say we start breaking all-time highs for Ethereum or anything like that, we will be on live spontaneously, right? So make sure you guys are subscribed so you can just get that quick alert so you guys can come join us if anything big is going on in the market. But with that being said, have a great Friday. Members, we will be live this weekend. We'll cover some stuff. Basically, maybe have to revamp some stuff that we have planned as far as these next couple months. We'll go through it and also maybe jump into some trenches because I'm sure DeFi is going to be going absolutely crazy too. So with that being said, guys, thank you. Have a great, productive Friday, and I'll see each and every one of you guys next time we're live, all right? Thank you. See ya.